that we've got some indication that they're shopping for a wedding, we may introduce them to other similar brands that they might like to look at. So that's one very tangible, very obvious use of AI in our product and business, which is a recommendation engine. But the second one, and we can maybe go into it a bit more detailed later on, but how we manage the entire moratorium experience in the first wave of the pandemic. There we found that having a machine learning approach to personalization, and I hope we're going to talk more about personalization today, helped us not just reach out to customers in the right tone and the right manner at the right time, but also reduce our risk in a very turbulent environment by offering customized, personalized offers on an automated basis to every single customer in our book, which was in the millions. So it was a really, really great time to demonstrate the power of a data-driven approach to customer service. We could never have called every single customer at that time and helped them through the moratorium. So we used AI and technology to do that in an automated way.
It's brilliant. Thanks, Lizzie. There's contrasting when you look at overall, earlier we used to call BFSI industry, where banking, finance services industry, where it's very traditional, century-old industry, more of calling. And it's so glad to hear that, it's probably not scalable to call individually and probably not convenient also to the customers, to receive calls. Using technology to solve and provide scale is phenomenal. Thank you, Lizzie, for providing the great insight. I'll move to Abhishek. Abhishek, personal, from the way you guys are really emphasizing the space, Flexi Loans has a very impressive vision of not just being lending, but also you have a platform for lending, right? And I think that's what I've read in the recent interview. And how important CX in the space of being a differentiator, especially you have a platform, you compete with your peers, and also at the same time, you have to provide your own value system. Mm-hmm. How important CX plays in this entire ecosystem that you operate?
We focus on small businesses and SME lending, and if you look at the context of it, SMEs typically are far more difficult to underwrite, onboard, and collect from, purely because of the fact that they're not as digitally savvy, and also a lot of digital channels don't really work for them. Whether it is eKYC rails, whether it is about NSCHs, a lot of us don't know, for example, that the electronic NASH doesn't really work on a current account as effectively as it does on a savings account. So there is a lot of digital rails being built for MSMEs right now. But coming to your question about user experience, I think, and let me spend a minute on the platform itself. On this platform, we've got 40 ecosystems of the country who is effectively hosting sellers or merchants on their platform, and they want to do lending for them. And then there is this platform which effectively takes all of these customers, then processes them, onboards them, underwrites them. And on the other side, we've got about 12 lenders, one of which is our own NBFC. And to your point about competition between us and them. But if you keep the customer at the core and look at it from a user experience perspective, then it becomes very simple to understand. Customers want one of the four things. They want money fast, they want money cheap, and they want money with a good experience, trust. And there are different pockets in the country. Some people would fall into segment 1, 2, 3, or 4. But for a fintech like us, the reason to be is effectively experience and speed. Because we can never have the cheapest cost of capital compared to a bank. We can never give the highest exposure that probably a bank can do, because of our cost of capital constraints. And so time, speed, and experience actually become the most important thing for fintechs like us to exist in the first place. And then, of course, it builds from there. We've seen primarily, if you give a good experience to a merchant, they would typically, that leads to trust. Trust leads to loyalty. Loyalty leads to repeat loans, and the cycle builds. Because we are all doing short-term loans, right? You're on a treadmill. Every day you have to do new loans to grow your book. And if you have a leaky bucket, then effectively it means that you have to grow faster, you have to do more loans. And it's never a sustainable business. So whether it is consumer lending or SME lending, and we've got multiple parties to please. We've got partners, we've got customers, and we've got lenders. But if you keep those same two principles, that we will do the loans in the fastest manner, and we will always give the best experience to our partner, customer, or lender, then I think as a network, it starts to play out. And we are seeing that. that we've invested heavily. We are a zero branch, zero DSA, zero agent company. 250 people sitting in a nice office in Bombay, servicing about 15,000 pin codes in the country. These pin codes contribute to about 80% of the demand, SME demand in the country. It's an incredibly difficult business to build, especially on the MSME side. But we've invested in user experience. Agility, of course, comes naturally to most fintechs because of the fact that we've started technology first. And the results are you can already see that as MSMEs actually we think of them as digitally savvy. But today, if a customer knows how to use a WhatsApp and can upload or send a document on WhatsApp, that's all the digital savviness you need to actually onboard them and give them a nice experience. So the lines are blurring very quickly in what is a good user experience, because user experience is also being redefined. When we started our business, having a mobile app was the best thing. That was
Yeah,
user experience. If you would build a mobile app, today nobody wants to download a mobile app to get a loan. They want to get a loan on WhatsApp. They want to get a loan through a chatbot. And the frontiers are moving so fast that I think we will see different dimensions of user experience being created in the next decade.
absolutely, Abhishek. I was just looking at the entire panel when you said WhatsApp and how easy it is, digital savvy. I see Lizzie and everybody else like, yep, we hear that, we see that. And very much, in fact, when I was giving a bit of a quick stat, I think WhatsApp is one channel grew significantly in the last year and a half or so in India. I think it's always prominent, but businesses driving experience through WhatsApp and tapping into, and also a little bit of adding to there, actually, when there's a bit of issues around the policies of WhatsApp. I think how quickly the Telegram and as well as things like Signal, there's so many messaging channels that I think customers today are, like I said, expectations changing, so they would like you to be operating in their preferred channel than they should come to your app. I think the dynamics have changed very quickly, and I think being messaging first, either it's WhatsApp, any of the social messaging channel, to drive customer engagement. I think it's probably the best, because that the tonality is the softest. This is where those customers are talk to their friends and family. They're always on that channel. So great call out, Abhishek. Thank you for that. And you called out MSME. And if it comes to MSME, and I can't think of anybody else than India Mart. Amrinder, I want to pull you in here. Now, maybe I should hold on. Should you say India Mart could be probably what, big daddy of MSME, and so just going in there, I think it's a forefront of bringing SMAC, right? India, that's what India Mart does. My question is actually, basically, can you share some insights in the place that you operate as India Mart? Customer experience, and how do you deliver seamless experience when you have like a marketplace situation like India Mart? How do you play with different parties, and how do you provide a seamless CX?
It's a very good question, Katie. And I take off from where Abhishek left, that even using a basic messaging platform is being digital savvy for SMEs. So they are what we think of as digital savvy. I mean, there's so much of distance to be covered. But as India Mart, we've been bringing them online, and it's a platform that generates leads and business for them. So that's the first introduction to digital. I mean, if you're getting business online, then you start believing that more can be done on it. Especially from the topic that we have today, if you look at from FinTech perspective, I think the first financial interaction that a seller has is they want to pay their subscription. And Abhishek touched on the e-Natch. The changes that happened with the pandemic, one thing, Abhishek, we did overnight was that we moved all our subscriptions, and majority of our new sellers on board are on subscription purely on e-Natch. And it's been smooth. And that's like first digital adoption, that my payment is going monthly and it's going all online and it's seamless. That's starting from there to building an integrated experience. I mean, when it comes to messaging, it's messaging with a context. You want to message to a customer and you want to interact with the customer. You want to call a customer. You want to have a place where you can figure out, put some reminders. You can put some notes around it. You can have your missed calls. You can have various team members added to that chat conversation, have a history of chat. So I'm proud to say that that's another platform that is very well integrated at India Mart, which our sellers use. I mean, 90% of our sellers are completely onboarded on using that communication come CRM platform, which is absolutely free and which connects them with the business. And the third part of it is payment. So there again, and lending. But I think the initial, the start beginning of that is that can I get my customers to pay me online? I mean, it's not large payments. Large payments happen in different ways, but small products, small payments, 5,000, 10,000 rupees, 20,000 rupees payment. How do we enable that in the journey itself? So that's where we provided our customers an integrated payment solution where they don't need to do anything. It's just a simple link that they pass on to the customer and customer pays. Now that itself, building that product, making it seamless, making it as part of their journey is what helped in adopting that product, where they started getting payments from their customers through this channel. The next part, which all of us are trying to do, is how do we get to lend to them? I think there's a big journey because all of them are not online. All transactions are not happening online, but a lot of business is being done online. I mean, when I say IndiaMart sellers, then IndiaMart sellers are consuming leads, they are talking to customers, they are sending, like, collecting payments. So a lot of data is getting generated. So we are doing work around personalization, similar to what Lizzie said, that AI/ML is important because that helps you to personalize not just what you want to see, which customers you want to meet, both from buyer and supplier side, but also what is your history, what kind of a business you've been doing, how long you've been with IndiaMart, what kind of categories were you dealing with, what is the size of transaction that you're doing. Basis that, we need to start looking at how we can lend to this segment rather than purely looking at a transaction flow, because that won't happen. It's not Amazon that you have pure transaction and you want transaction stream, start lending. So how do we build lending on top of a business where some of the things that business has taken online are there? That's what we are really building. I mean, on the platform, that's our vision, that can we make IndiaMart the central platform from where any seller can actually access credit very easily. And it has to be frictionless. I mean, you can't have one separate KYC going and then another bank account coming and another credit check coming and then saying that, oh, after all this, out of 10 guys, only 2 will get, and it's only going to be 50,000 rupees. So that's the problem that we are solving. I think that's where IndiaMart is going to play a central role, and we've started building our platform to enable that. Thank you.
Wonderful, Amrinder. I think you touched upon some very important aspect, and it's very clear with just about 3 panelists talking about the importance of convenience, customer experience, and also personalization using technology. I think a lot more to learn, but before we delve into the data-led conversations and stuff like that, let me just bring in Subrata. I think, Subrata, you must be thinking, Amrinder and everybody talking about the big sector, even Abhishek talked about, how do you go have accessibility to tier 3, tier 4, inclusivity, I would call, of financial inclusivity, because banks and all survive, maybe go to tier 1, 2, 3, not 4 and 5 and beyond. But I see that, Grow Capital basically focusing on primarily MSMEs and tier 3, tier 4 cities. And especially, I want you to just give you a different take on, because your targeted segment is very different, does it really differentiate? You have to have a different strategy for customer experience because the technology channels and communications used differently. Do you need to adopt a different techniques there?
Great question, Katie, and thanks for that. I mean, some great insights we have heard already from Lizzie, Abhishek, and Amrinder. I try to add our perspective here. And at Grow Capital, we say that our mission is to solve the unsolved needs of SME sector, and SME is a large sector which is not formally served. The credit penetration is little lesser. So our perspective, we are present across 9 top cities of India, and at the same time we are present across 40 branches in tier 2, tier 3, expanding to 75. That's our footprint. We also serve through our partnerships and alliances, as well as our supply chain vendors, supply chain ecosystem network, 130 plus cities across the country. So that's our footprint. And in terms of product offering and customer segment, we cater to the prime target segment with the 5 crore secure ticket size, down to a small retailer in a small sized MSME in a tier 3 location. So from that perspective, and coming to a question on CX, I'll give a sense on how we approach it, Katie, and I'll talk specifically about the tier 3, tier 4 at the end. So the way we look at it, the customer satisfaction and in turn the experience. That is driven by two things. Number one is how are we able to serve the need of the customer? Are we able to give him what he needs? And this is lending. So, what is the practicality and what is the ease of the due diligence process? This is a very important point for us, MSME. The second point is the convenience of the transaction. In other words, what is his experience on the platform, where much of digitization comes into play. Our whole approach to creating a great customer experience stems from point one. And to articulate this, I will highlight a few things across the customer spectrum. So at the top of the spectrum, we have the prime customer segment, who are the target segments given for the large banks, who need very quick approval. They know they're chased by everyone. They need low rate. They need the money that they need. Usually this is the intermediated transaction. For them, our solution is very quick approval, a 60-minute decision. All input data is coming digitally. If they have a request that the default sanction is 4 crore rupees, but they need 20 lakh rupees extra, we have a well-defined policy framework where looking at a certain set, we can accommodate such requests for this set of customers. The next segment is a near prime or emerging corporate segment where COVID has impacted their business, and by conventional means, they're finding it difficult to raise funds immediately, but they need funds. We come in with a product where we are able to see the banking and the GST data digitally and underwrite not their current position but their future potential and say that, hey, we are able to service your need. Coming down to the supply chain ecosystem, where we have a small supplier to a very large corporate. The small supplier to the large corporate has a very strong business flow, which is very consistent over a period of time. He wants working capital to fund his invoices. However, he is small so that he is not yet under the coverage of the credit scheme arranged by the large anchor. We are in a position to come here, use data analytics, machine learning, and say that we understand the continuity of your trade flow. We are willing to give you a funding, even if you're not covered by the anchor directly. Anchor-led funding is the conventional way of supply chain finance. The other thing is a small MSME in any corner of the country backing a purchase order on the GEM portal, government e-marketplace. And through the GEM Sahay program, we are one of the wave one lenders and live on disbursements. A small business has got a purchase order. For him, if he gets the financing, he can service the order and his revenue grows afterwards. We cannot see a trail of revenue, but the financing is a means to increasing revenue. We have a product where we can service the PO, the purchase order. And of course, lastly, coming to the tier 4, tier 3 retailer, where we go to him and we can have a GST banking product, but it seems that he doesn't have a bank account where there is a lot of transaction. There is a sparse bank account where much of his transactions is in cash. But here we say we have subsector level customized assessment templates where we can go to him and we can still assess his business, give him a 15 lakh rupees loan against his house or 5 lakh rupees loan. This entire gamut. So this is at the heart of our customer strategy. MSMEs have various needs. MSMEs nature of business and cash flows is very different. It is a absolutely massively heterogeneous segment. We want to go to the customer with the right template, and not apply a generic template. The same question is, how do we render it digitally? So we are a deeply data analytics and technology focused company. And when we started pre-COVID, also we had a technology stack which could give a 60-minute decision for all kinds of loans. We have augmented that. We have one customer-facing application for each of these business lines and the target segments I told you. We have pivoted greatly in many ways. First of all, which started as a rules automation, it has now become a full-fledged digital stack post-COVID, which can do a video PD with the customer, video conversation. It can do documentation. It can do NAT registration to whatever extent that works. That has been done. We have invested heavily in the power of data analytics. We cannot say enough on that subject, but we have a patent file first generation set of scorecards. We have now moved to our own homegrown second generation scorecard, which takes bureau and banking into account. Very soon we will see bureau, banking, and GST come into the fold. Even in our minds, that's going to be the next phase of evaluation. All of this comes through a digital stack. There are numerous permutation combinations, even on the technology front. We often, and of course, a lot is said about building the stacks, but even within an umbrella framework for a technology stack, there are many variations, depending on which channel the lead is acquired from. Am I acquiring it directly through the branch, or it is coming from the GEM Sahay through an integration, or I am integrating with somebody like Abhishek and doing business, and that's another route. The overarching umbrella theme remains the same, but the technology differs. So I think we had been agile. I think these are the two areas of focus, and so starting from the product proposition to being nimble and agile in terms of data and technology. I think this shapes up our customer experience strategy across all segments, and more importantly, as we go to the smaller MSME segment, where the need of credit is the most.
Thank you, Subrata. I think you touched upon being agile and agility. I'll come to that shortly, but thank you for the great insight. Sandeep, let me bring you to the conversation. At the beginning, I said, probably you guys also will agree, it's a digital first virtual everyday world. For FinTech, it's a beautiful sweet spot, right? So because you tech first, customer first company rather than branch first or physical touch first. Especially for the business that you're operating. And how did this impact, especially digital first, for the fintech industry? I know you worked across multiple businesses, managed very large portfolios before you started on the journey today, what you're currently on. And because you moved to fintech industry, do you think customer behaviors have changed from a traditional banking industry to fintech industry? Second question there, actually, in the same way, do you think being in the fintech and in the digital era, has it really helping you to propel the growth revenues?
Well, Katie, thanks, and good afternoon, everyone. Okay, just to give you some brief background about us. So I started on this journey in 2014-15 when we actually acquired a small housing finance company and built it.
Sorry to disturb you. I think your camera is not on.
So there's some issue, unfortunately, with my tech in terms of security restrictions for this particular app.
Okay.
So I didn't have the bandwidth to get that open. Okay. So just to give you some background, essentially, when we started out on this journey, we had a few choices to make. We were a late entrant in a very heavily dominated market in the prime segment, and a significantly underpenetrated market in the financial inclusion side. And if you look at the bane of consumer lending in India or mortgage lending in India, it has been, if you look at the prime segment and the near prime segments and the emerging segments, small ticket sizes, very intrusive lending, very painful, very high on OPEX, and very high on not just credit risk, but market risk, operational risk, and scalability. And that's generally the challenge with all emerging markets. So when we started on this journey, we actually figured out that we'll build all our tech and all our data science. And ease of doing the business and simplicity and the customer experience is something that we'll do. So we said we'll not have a paper application form, which had never happened in housing finance. And we said that there are customers who can understand a bit of tech and key in some data on the phone and all that stuff. But we at the same time realized that to lend in India, it's like 30 different countries. We today have presence across 100 markets in 13 states, which is close to 75% of the consumer lending profit pool. And the way we actually looked at it was three things. One, to make sure that we build all the capability and the know-how to execute locally and domestically with a set of people. And people, it's a very simple business and people will be integral for quite some time, even now. But along with people, make sure that the process, the scalability and the simplicity and the customer experience is backed by technology, analytics and data science. So that you don't get into a situation where you push people to a problem and you build traditional structures where you have a supervisor on a supervisor and you will have large organizations, and it's really very ungainly and very non-scalable as such. But to build nimble, flexible organizations. So we chose to back a lot of young people. And I didn't hire a lot of people who work with me in the banks. And people who are 50, 60% ready, and groom them. And today we have a 35-member tech and data science and analytics team. All our tech is owned by us, right from our lead generation to origination to customer service to treasury to operations. Every single thing is on one single platform. And what that's actually helped us is to make sure that the customer gets a delivery model and a service experience that's very different. And having done that, what allows us to seamlessly scale and continue to do well during good and bad times, because all the data that we have and all the analytics that we have, and what we don't realize in India is that the credit bureaus are actually 15, 20 years old. And because it's a very unforgiving market, all the historical data is there still on the bureau. But the ability to nuance this and to look at stuff in terms of, you can today impute income, figure out leverage, figure out velocity of borrowing. You can do so many things that the score really doesn't matter, although the score is very psychologically important thing for a lot of traditional people. So we do look at the score and say, yeah, that score is very important. But more than that, understanding the customer, which school the child goes to, which business the family is in, is it a first generation, a second generation? What are the things that you do to make the customer's journey easy, and to understand cash flows, and to believe that these are customers who have aspirations to grow. So while they would be underserved and underpenetrated at one level, if you go beyond the top 10 markets into the next 40 and the next 300 markets, and you bridge the gap between semi-urban and rural, I guess the opportunity for us, if you look at mortgage penetration 10-11%, we're all just scratching the surface. And as I think Suprita said and Abhishek said, I think the opportunity for you to build a financial services businesses with a tech and digital first. But having said that, in our view, for some more time, having enough people around to make sure that you have controls in some form is important, because our ticket size are significantly larger. We do around 10-12 lakhs in the housing finance, which is relatively small by the metro businesses or the prime businesses, but it still is important for us. But that pivot is happening. So what people do traditionally with 5,000 people in our kind of business, we are able to do with 800 people or 900 people. And then you can reward those people, grow those people, give a customer a different experience, and the unit economics and the differentials can actually be passed on to the customer for affordability. And also you can cross-sell, give them other products, and do a lot of other stuff to make life really simple and comprehensive. So that's been our approach, and I think it's been a very refreshing journey for us. But great to learn from you.
Absolutely, Sandeep. It's so good to hear we call financial inclusivity, and the financial inclusivity, if you look at in India, the 80% of people and citizens are in tier 3, 4, and 5 and below. And I'm so good to hear being a part of the panel. Everybody has got to focus on going after that bigger chunk and bringing financial inclusivity to every citizen. That's phenomenal to hear. Thank you, Sandeep. I would want to change gears and wanted to go to the next topic of conversation. We have one customer experience is also and also have agility. And Lizzie, I would start with you. Maybe you would let me put. In the last 18-20 months, I'm sure there's been a testing times for all of us. And I'm sure you had a moment or two or many where you got to be working with extreme agility. Could you share one that you probably where you acted with agility in the last 18 months? At the same time, if you have to put money on the table and money on some tech, people, processes, whatever, where would you put as co-founder and CEO in the next 12 months?
Brilliant. Great question. I guess the best example to talk about agility would be back to the moratorium. Sorry to bring that up. It's a very depressing time for anyone in digital lending, but maybe in the context of the wider sort of lockdown and wave one of the pandemic and how we navigated that. I'll just give you a quick example of what happened just a couple of weeks after the lockdown had been announced, and everybody was very fearful and struggling, not just from a personal perspective, but from a business and risk fear perspective in the industry. On a Friday at 12 o'clock, the RBI announced that this consumer moratorium would be rolled out. A lot of questions, a lot of unknowns, a lot of confusion in the industry. And I remember we got on a call at 1 p.m. as a management team, and we made some very quick decisions. And one decision we made was the quicker we go out and give customers peace of mind that we will honor a moratorium for them across the board, the more goodwill we will build up in our business. And that is a hypothesis that will lead to greater repayment behavior, and therefore we will reduce risk. And it's simple analogy, or way to put it is, the person that sort of goes out and bats the hardest can come back and play again the quickest, right? You kind of stay in the game longer. So we said, let's make that decision. We worked through the night, and by I think 9 a.m. the next morning, we could release across all our platforms, website, app, communications, clear, consistent communication, and importantly, product features that allowed all customers to opt for the moratorium should they need it. I believe we were the first consumer lender in the country to be able to roll that out, and it really, really paid off. The reaction from customers was astounding. We got, emotional phone calls where they were saying other financial institutions have given me no clarity. They're not answering the phone. There's nothing, there's no information. And just by kind of cutting through the noise and creating the clarity, but doing it so quickly and making those bold decisions very, very fast, I think we earn a huge amount of goodwill. Now, I'm going to link that into your second question, which is particularly interesting, which is, what are we betting big on as a result of learnings like that? One of the biggest learnings from that weekend was the importance of our leadership team and how many important decisions they had to make on the fly. There were so many nuances to how we would incorporate this new kind of legal framework into our business. And rather than have to keep scheduling conference calls with lawyers and things like that, they took it upon themselves to create small squads with independent decision making. And they ran really quickly, made literally hundreds of decisions, followed the ask for forgiveness, not approval model. And by the end of the weekend, that's why we could be the fastest. So my learning is empower your team, empower your senior leadership team to make decisions about the business that they understand. Obviously, anything completely seismic we bring to a wider forum, but really empower your head of customer service, your head of communications. Let them, run with it, and you can actually create more, impact and more powerful customer wow versus every decision coming top down. So that would be my feedback.
Wow, Lizzie, that's fantastic to hear. But I won't let you go until unless you say agility means, if you could just say, what does agility means for you in one word, probably? How do you define? Is it empowerment? I'm reading empowerment as a keyword,
Yeah. And
but
that's a good word. Empowerment, not just of your people, but also of your customers. And our entire product
customers.
ethos is around enabling our customers to live their best life, empowering them to afford the products they need. And so by being agile, which is actually one of our key values at Zest, we give that empowerment and enablement to our customers. Yeah.
Fantastic. Thank you, Lizzie. Thank you for the wonderful insights. I think I need to get a similar insight. Maybe Abhishek, if I can put you into the conversation, very similar. I'm just thinking through. We are end of September, 3 months from now. This calendar year is over. I just can't believe that the time flies so fast. So again, a moment probably that you could share where you have to act with agility, and you brought being agile really helped you to thrive looking back in last 18 20 months, and probably where would you put your money in the year 2022? Is it people, process, data, technology, where your mind is?
So, Kerry, I'll give you two examples on agility. One is very kind of near-time operational agility, and one is more around the strategic agility that organizations need to have. And I kind of keep them in two different boxes because you have to be both in today's world. But when ILFS crisis happened, there was a complete shift in terms of the fact that NBFCs are untouchable and nobody was lending to us. So raising debt became incredibly difficult, and people would remember that time. And if there was a book that we would write, then there will be a chapter on that. But at that time, we realized that you cannot be, and money is a raw material, so it is incredibly difficult to scale if you don't have access to money easily. And so we started moving towards a platform and a co-lending approach. And that is what we are today as a platform. So pre-ILFS, we were an on-book lender. And post-ILFS, we are a platform. So that kind of was the strategic agility that the organization showed to quickly realize the signals, move towards it. We could have waited 1 year to get more debt, or we could have just used that to build new technology and bring co-lenders onto the platform. And I love this. This is a lending example, but in today, what is happening is out there, there's a talent war, right? Everybody, it is difficult to hire someone today, especially one with a 90-day notice period. And what we're realizing is you have to show agility today in even smaller things, like how do you tide over this talent war and not lose people and be able to kind of be relevant to today's talent pool. And when we saw the news about people getting BMW bikes and crores of salary and international trips, we realized that they've forgotten completely about the women techies because they don't want BMW city bikes. And just kind of being agile and changing your policies on the go and trying to hire more of the talent pool which is available and disregarded at this point of time. That's also equally important as organizations who are building in today's time, because one new article, one new tweet, one new LinkedIn post will completely change your next 3 months or 6 months at least. That's those are the few examples. I would definitely put my money when it comes to agility on the fact that we are moving into an embedded finance world, embedded banking, embedded lending, embedded insurance. there is a bunch of embedded happening, and I'd put my money on that wave because India is aggregating a lot,
Yeah.
and if we can build experiences that are native to the transaction flow, which is what embedded effectively means, then you would see a far better uptake of financial services than what we've seen in the past. It has to unbundle, it has to go Lego boxes approach, it has to go closer to the customer rather than away from the customer. And to your last question, to me, agility really means that as an individual, as an employee, I should be able to see the impact or the outcome of my action. If I can build an organization that allows to do that, then I would always take micro decisions, right decisions, decisions that actually make an impact. The moment it is siloed, it is no longer agile.
Wow. That's fantastic. Very good perspective. I probably was thinking maybe I'll bring in even, Amrinder into the conversation. Amrinder, it is so relevant for all of us, right? We are at a crux of the point where we went through, I would say, a journey in the last 18 months. So I would call journey because some of the journeys been incredible growth journeys. I think Abhishek talked about BMW bikes and whatnot. It's brilliant, and we also seen some travel transportation, hospitality industries have been hit a little harder. Keen to understand some things that you could share from on around the agility, being agile in the last 18 months. One moment probably you could share, and also where would you put money on?
Yeah, I remember the last week of March last year, and this was Feb when we started seeing some trends around users searching for masks, and we thought, what's going on? And by that time, it was March. We all figured out it's pandemic, and it was last couple of days in office. So one agility immediately was okay. From tomorrow onwards, there's no office, and the company has still got to run. So that was the first point. And second, more importantly, India Mart really played a very important role in bringing, in that difficult time, suppliers and buyers together for critical items like starting from masks to oxygen supplies to ventilators to all the hospital supplies. So we quickly reorganized ourselves and said, business will happen, but what can we do together as a team where we orient towards structuring content, structuring suppliers, their information in such a way that the pockets of demand can access those suppliers. So that's what we really did for those 7-8 months, and that really shifted the trajectory for India Mart. And at the same time, we took a quick decision on our customers. SMEs were totally clueless. They were customers, paying customers for us. So what do you do with them? Exactly what Lizzie said, that we were very clear at that time that we will stand by our customers. And that's the communication we made to them. Similarly, employees, there was uncertainty what will happen, whether they'll be retrenched. There's a large workforce. So the first thing that we did was we spoke to our employees and said, we are in this together. We got to make this work. Currently, our mission is to make this nation go through this, get the supplies to the right places. Let's go through this, and then we will see how things pan out. And it worked for us.
Brilliant. And where would you put money in the next year, considering everything that we went through?
So I would say, having been in the product and technology space, I mean, we don't have any factories to invest in. And the whole world is moving towards open source. So a lot of what we do is open source. So really, there is very little money you have to spend, except for some on Google and Amazon cloud spends. But largely, technologies are today open source. It's about how smartly you can use APIs, you can integrate different solutions that are available to come up with something that works for your customer. So I would put all my bets on the team, because team and the leadership and the people who are actually going to do work on the ground, they are only going to make that technology happen. By technology by itself, a process by itself probably will only go as much or as far. And today processes are getting disintermediated because of technology. I mean, there are so many physical processes where once you have tech in place, you don't even need them. It's seamless.
Absolutely, Amrinder. Thank you. Beautifully said. I think being open technology, adopting open standards is the best way to do, because it provides you the endless, I would say, limitless possibilities of bringing things very quickly, integrating it on the fly, get going. and it basically helps you to being agile. Thank you for providing the perspective. Let me just go to Subrata again. Subrata, this is a relevant question for everybody. I would probably change it slightly differently for you. I would start by asking, any specific technology investments that really helped you from the last journey, which would actually carry forward in the days to come. Like something that you've done it, you said, great, that's not a break fix. It's actually long-term strategy. Is there anything that rings a bell?
No, sure. There are quite a few things that we have done, but there's a philosophy part. So ideally, we realized at the onset of business that data and technology will be central. So the biggest investment was to set up a team from day one, even before starting 1 rupees of disbursal, because we realized that it is one thing to build this at one time. We realized that this will undergo so much of change that it is difficult to foresee even the next 2 years, and the ability to always be ready to make the most of the situation. When we started business 3 years back, we did not know that today we will have James Sahai or we will have account aggregator or token will become this big. But because of the investments we made, we were in a state of readiness to start disbursing James Sahai. So I think that was the big thing. We have done all the other things. We have 100% cloud infrastructure. Since our focus is on data, we have a zero data loss architecture where we don't lose one bit of data that we get. We invested in top quadrant statistical software, and we invested in a highly skilled workforce who are also hard to get. We did all that, and I think, but the key matter is having invested from day one, such that 3 years down the line we are in this state, and also we are agile. You keep on saying that, and agility is being able to respond to any emerging situation quickly.
Speed and flexibility. Wonderful. Thank you, Subrata. Sandeep, I got to ask you this. It's so much hot in my head that we're coming to the end of the year. I'm sure the future coming is going to be bright. Hopefully, it will be more prospects for all of us. But anything that you could share being an agile in the last 18 months that you would carry forward in the next 12 to 18 months again?
Well, I guess two things. If you look at this, for us over the last 5 years, when we started, we were hit by demonetization. We had 30 crores of capital. And from that point to where we've got here today, the way I'd look at it is strategic agility and ability to adapt and change and to continuously innovate. So if you look at agility for me, agility is to understand customer experience and put the customer at the center of everything you do. And to do that, you got to understand that their expectations change much faster than what we would want to believe. So I have been used to situations historically when customers would wait for 20 days to get a car loan or a house, maybe 60 days or 90 days. So today you need to give it to them by evening, and over time you got to make it as simple as buying something on Amazon. And that's quite possible, and it's very real. And I think as all of them articulated, and what is happening now in the consumer financing business or many other businesses, what Klarna is doing in Sweden, what Lizzie is trying to do here, and many others, I think there's enormous opportunity. And it is about being flexible. And on technology, it is important not to build on top of it again and again. What happens traditionally for companies, even new age companies, is that once you built a platform, you're constrained to build on top of it, because that's how India or most markets, you have to have the ability to give up something that's going really well and say technology has changed, the models have changed, and you have to build from scratch again. And what you build, you have to believe will be better than what you had for the last 4 years or 5 years. And if you are able to do that and innovate continuously, and the ability to say that we'll remain fit for growth and future ready, I guess sky is the limit.
Absolutely. Sky is the limit. I love that. We're also coincidentally at the top of the hour. I see Pooja pinging me already. In summary, I think being agile means, I hear that speed, agility means flexibility. More importantly, embracing the change. And when businesses does that, actually, there is as per recent I think McKinsey report that I've studied, it's about 50% operational efficiency that you can bring into your organization, and you can also improve your bottom line by 50%. It can also have a ton of impact on customer satisfaction and employee engagement. I think we touched upon employee engagement today, which is a great factor. But net, it's been an incredible conversation, having this fantastic panel. Thanks for sharing all these fantastic and phenomenal insights. And I want to thank you for all the viewers for the patient listening. Pooja, over to you.
So I think Mr. Prasad took all my words that I was supposed to say in the end. So thank you for that, and thank you for this wonderful panel discussion. I think the word agile or agility is something that was truly justified in this session. And very rightly, each one of you pointed out on the fact that it's so important to embrace change, to become flexible, to sort of reach out as faster as possible. So, like someone said, internet technology is a boon or a bane. I think here it's absolutely a boon. So, thank you so much for your ideas and suggestions and thoughts. And thank you for supporting and joining us. Please take care.
Thank you. Take care.
Thank you. Bye.
Thank you.